Welcome to the Retirement DNA podcast. I'm Aaron Johnson, and we believe you deserve financial advice based on your best interest. In our podcast, we discuss all aspects of retirement planning. So today we're going to talk about taxes. We've just had an administration change, and we want to find out what might be in store for taxes. So today we're going to sit down with the Duane Johnson Group's very own enrolled agent, Valarie Lukacsffi. We're going to find out what's going on in the world of taxes for 2025, and what are some of the things that you could be doing to help save on taxes this year and for the future. So Valarie, welcome to the podcast.
Thank you.
Can you tell us how long have you been doing taxes, and how long have you been running the Duane Johnson Group's tax office?
So for taxes, it's coming up on, I think, 20 years, maybe next year. And this is going to be my 11th season with the Duane Johnson Group tax office.
Oh, good. So I've got some questions here, and just kind of want to go through some of these questions that we get asked a lot, and that I know that several people are kind of wondering out there. So first one is have you seen many changes to the tax code for 2025?
For 2025, there really has not been many tax changes, just some inflation adjustments for your standard deductions, and your tax brackets have gone up. But for the most part, things have stayed the same. Well, I shouldn't say for 2025. This is for 2024 tax, really, is what we're dealing with now. But for 2025, they're still writing that. But for 2024, things have stayed pretty similar, and we'll see for 2025 what's coming up.
Okay. And how about any changes to IRA, Roth IRA contribution limits for this year? We get a lot of prospects and clients thinking they can make contributions to IRAs even after they retire. Can you talk about that a little bit as well?
Sure. For contribution limits this year, they pretty much stayed the same. You have your $7,000 plus your $1,000 makeup if you are over 50. Roth has changed a little. You can contribute a little bit higher income limits with that. As far as contributing to an IRA, you have to have what is called earned income. And when we say earned income, that means you either have a job and you have a W-2, or you're self-employed and have a Schedule C that shows profit. If you do not have those things, you are no longer allowed to contribute to an IRA.
So like a pension is not earned income?
No, a pension is not earned income. I know you probably feel like you did work to earn it, but you have to be working in the year that the money was earned for that.
And we have a new administration. What do you anticipate kind of taxes looking like under a Trump administration?
At this point, I think it's going to be interesting. I think we're not going to see a lot of changes. The one thing, we had an act it's called the Secure Jobs Act. It was set to sunset in 2025, still is. But I am thinking that that's going to change. I was pretty concerned about this going away because our tax areas are a lot lower than they had been in years and years. I think we're going to still see some pretty good tax we're just my mind. We're paying our taxes, and I think you're going to say the same. It's going to be interesting, but I don't think there's going to be a lot of huge changes.
Okay. And Trump has talked in the past about cutting taxes or cutting all taxes on Social Security benefits. How likely do you think that's going to happen? And I guess kind of at the very least, what do you think should happen?
I would love to see Social Security's not be taxable at all. The possibility of it happening, I kind of feel like not real likely, especially on higher earning people. What I feel like should happen, and I'm thinking maybe as they start looking at this, people become more aware of this. They'll at least adjust where it becomes taxable, where your Social Security becomes taxable to a higher rate. That has not been adjusted since we started taxing Social Security in the early 80s. At that point, maybe 10% of people had their Social Security being taxes. Now I would say we're seeing closer to 60%, and that number is probably even higher in California, of people paying taxes on their Social Security because it's based on your other income with with half of your Social Security. So at the very least, I am hoping that we will see an adjustment up for that number, and that will really benefit a lot of people.
So really just moving the brackets to where they can have a higher income before their Social Security starts getting.
Right now, it's like for a married couple, and it's kind of a weird thing, but it's like $35,000, and that's half of your Social Security and other income. That's not much. So if they would just adjust those, I think it would benefit a lot of people.
Sure. So when you see someone come in that has been doing their taxes for quite a while by themselves, what are some of the mistakes that you see people making on their own?
Well, there's several. One of them is if they have rentals, a lot of times they don't take depreciation or they don't take it correctly. The other is if they're self-employed, they don't take the depreciation. If they have it, they miss income. There's a lot of different things that we look for. Or even if you're not either of those two, missing credits that you have. Maybe you bought a vehicle or you did something and there's credits out there. Or I've even had people who've answered questions wrong that, when you're doing TurboTax or something, and it disallowed the child tax credit. They didn't realize it. That's a big deal. So just missing credits, not realizing they missed them.
Right. So in California, we have a lot of clients and prospects that have rental properties. What are some of the things that you find they're most surprised about when they're doing their taxes and maybe when they go to sell that rental property?
So a lot of times people will purchase rental properties thinking they're going to get a tax break from these, which can be true. But a lot of people aren't aware that the write-off for your taxes is phased out when your modified adjusted gross income, it begins at $100,000, and if it's over $150,000, you can't write off any of those losses. They are suspended. Meaning if in future years if you make a profit, you don't have to claim it that year, and it can't help when you sell. So a lot of people think, okay, I've got this rental, I'm going to have this big break, and it really hurts when they actually truly have had losses and they can't write them off. So that's when they're buying or own them. The other biggie is when they go to sell. People don't understand what is called depreciation recapture. And what that means is all that depreciation you took or should have taken has to be recaptured. And it's at ordinary income up to 25%. So it's a bigger hit than people are expecting. They're thinking capital gains rates, and it's a lot of times they've depreciated you've had it for 20 years, you've taken a couple $100,000 maybe in depreciation. It's a big tax bill. So they're not prepared for that.
Gotcha. So they've got to reclaim all of that depreciation, put it back on.
Yeah, it goes back as ordinary income and always for state.
So what are some of the strategies that clients can do to help offset their taxes, maybe going forward in 2025, and then also for future years, for 20 years from now?
So one of the big things would be, and this is tax loss harvesting, which that means is if you have stocks and have several of them, and maybe you have one that's done really well, and some that it's like, wow, these have had some losses, is selling them both, netting them together to maybe avoid taxes. Like if you had 10,000 in gains and 10,000 in losses, and you sell them both, you're at a zero, so nothing taxable. The one thing I do want to make people aware of here is what is called a wash sell. If you sell something short, meaning you sold it for less, and then you rebuy it too quickly, that is washed. You can't take that loss. And so what we just talked about wouldn't work. So this is where a professional such as Aaron and Duane are really helpful, because they will make sure this is not something you fall into. The other thing is starting to think about Roth conversions. And this is for people who are retired or close to retired and have some money in maybe 401ks or IRAs, just taking that money out of those, because when it's a traditional one and moving it into a Roth, which means it's when maybe Aaron, do you want to real quick explain the difference between a Roth and a traditional?
So with the traditional, you get a tax benefit or tax deduction when you've put the money into the traditional, but you're taxed on every penny when it comes out. The Roth goes in with after-tax dollars. It grows, and all the earnings are tax-free when it comes out.
That's it, exactly. So a lot of times you want to look at where you're at in your margins. And if you were low, and, it's always going to be kind of, you're right there, but in the future, you're going to have to take some money out because we have what's called RMDs. You may want to start converting it into Roth, pay the taxes now, let it sit there and grow. And when it comes out, or it doesn't even have to come out, you get it tax free. So there's some great benefits of doing that. Yeah, it may be a little painful now, but a lot of times in the long run, it's not. And the other thing is, like I had said earlier, we are at some of the lowest tax rates we have had historically. And I feel like we're going to hopefully continue to see this under the new administration. So these are the years to plan for what we know we have and what historically we've seen. It's probably a good time to look at, okay, where do I want to be and how much can I get over to avoid some maybe larger taxes on it?
One of the things that we have seen and heard from our clients that we do Roth conversions from is that their tax person that they go to does not like them to do this. And a lot of that is due to a lot of the tax professional, they don't look as good if they're not providing a higher return back to the client.
That is true. We always, as tax professionals, like to it's kind of like we're the messenger and we always like to bring a good message. And a lot of times, hey, yeah, you are owing a little taxes and it doesn't take into, and especially if you're not working with a group where your tax professional understands, hey, this is why we did it. They may feel like, hey, this was a bad decision. If you didn't do this, you wouldn't owe this much. But they're not thinking, but hey, 10 years down the road, you're going to owe this much less. So they're more about right now, a lot of tax people, and not the future planning.
Right. So I guess that kind of gets me into the next question then is, or, maybe just talking to your tax clients or to our Duane Johnson Group financial planning clients, what's the benefit of having your financial planner and your tax person at one location?
Like I said, the main benefit is that tax planning. You have two people. I'm looking at it from one way and they're looking at it, and we can come together, okay, what's it going to look like in the future? What's it look like? How much is it costing them now versus what it's going to cost them in taxes in the future? We can work together to come up with some pretty good plans, hopefully to help you pay less in taxes. It's just future planning together is, very beneficial because we're right here in the same office. Also, if you are a Duane Johnson client or with Aaron and Duane, and you're, I may know, or they will know you're coming in. If you don't have everything, it's easy for me to go to them and ask to get your documents. That has been so huge in the past year. It's just so nice because a lot of times when people aren't with us, I have to send them out, or go, okay, you have to go find it. It's harder than it, should be for them to get those documents because they're not getting mailed out a lot of times, and it has to be online. So it's just a great idea to have both in the same place.
Yeah, it's very nice for us to be able to make sure we're doing the right tax strategy for our clients as well. So Valarie is now taking appointments for the 2025 tax or 2024 tax year. Each 2024 tax is done. If you would like to call in, schedule an appointment with her, you can reach us at 951-244-6702. And our main goal to Duane Johnson Group and Bridger Financial Services is to make sure that our clients know that they can make it to and through retirement and can spend with confidence during those years. We want to make sure that they have financial security in any economy. And we help good people make great decisions so they can enjoy an amazing retirement. So thank you for listening to the Retirement DNA podcast today. If you would like to listen to past podcasts, check out retirementdnapodcast.com. You can also get to that from our website. If you have any questions or would like to sit down with us for initial consultation or review and to see if you're on track to meet your secure retirement, please give us a phone call. That number again is 951-244-6702. If you like what you've heard, please subscribe to the podcast. Please tell your friends and family if you think they'd benefit from the information. You can also check us out at DuaneJohnsonGroup.com or BridgerFinancialServices.com. Thank you and have a great day.
Investment advisory services offered through Bridger Financial Services, LLC, a registered investment advisor in the state of California. Insurance products and services are offered through Duane Johnson Group, LLC, affiliated company. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Duane Johnson Group, LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Duane Johnson Group, LLC.